Okay, well, let's get Fook Hien Yap. He's Senior Investment Strategist at Standard Chartered Bank. He's joining us. Fook, great to have you with us here. Thank you for your time. Appreciate it. So we're getting into the earnings season here and in the US as well. Markets have done extremely well. There is the budget session here in India. A period of consolidation and just stock taking would be nice rather than, the really up and up non-stop rally that we've had. Gives people a chance to think. Just your thoughts, are we likely to get it, or you think we are in this broad up move which continues?
Yeah, thanks. Thanks for having me. Look, I think in terms of the short-term consolidation, we do get a lot of investors as well looking for a kind of pullback before getting in. Look, it's hard to predict in the short term. Headlines can move things. The big events, as you mentioned this week, is like a Powell's testimony, and then we've got a CPI print coming up. We've got US earnings coming up on Friday, they're kicking off. So some of these headlines could impact the market in the short term. I think we're looking out more at the 12 months horizon where we're still constructive, driven by the Fed being able to cut rate and extend the economic cycle and earnings growth really coming through. But in terms of the short-term signals, we do monitor our short-term technical models. We do not see any signs of it being stretched and pulling back yet. But our view, like I say, is more in the 6 to 12 months where we're still constructive.
Okay, so no signs of this market being stretched even in the shorter term. And you're still constructive on global equities. Got that, Fook. Good morning and thanks for joining in. This is, of course, for the global markets, right? Back home for India, we have a big event upon us, which is the union budget. The expectations are that the government can do both. Come out with populism measures at the same time, manage the fisc, manage growth, infrastructure, etc. Your thoughts on how to approach the Indian markets now?
Yeah, we do like India as a market because our focus, especially on the opportunistic side, is we're looking at earnings growth. And of course, as you know, India's earnings growth is up there, and we think it can continue. The reduced mandate for this coalition government now, we think it's going to mean a bit more spending on rural projects as well as infrastructure projects, which is still pro-growth, and perhaps a bit more on the green energy side of things as well. But it's really a continuity that we see, and government still being pro-growth, and the earnings we think will still deliver, and the GDP growth that India has above other countries in Asia, we do expect that to continue. So within Asia, clearly India is our preferred market now. People talk about valuations, but with most of the world moving into a rate-cutting environment now, we think valuation is a bit of a lesser concern, and so we're really focused on earnings growth, and that's where India would really deliver.
All right. Hi, Fook. Good morning and good to see you in. So we've got our elections out of the way, and the outcome is something that the street likes or has digested at least. But the other big trigger could be the US elections, and it appears that Trump is in the driver's seat, at least as of now. What kind of impact it could have for global markets and India in particular? Do you think it could be a bit of a negative?
Yeah, no, thanks for that. The polls clearly are showing that Trump is way ahead now, and there's a lot of questions on Biden, whether he stays in the race or not. And look, I think the market is already starting to price in some of the impact of what Trump coming into power could mean. Certainly, what we're concerned with really is any impact he might have on inflation. In terms of the tariffs that he's talking about and the spending plans that he might have, that's really the concern, that the impacts on the policies could have an impact on the economics. Otherwise, the geopolitics, the impact tends to be short-lived. Look, in terms of the relations, I think it's clear that the opposition towards China will increase. I think in the past, towards India, it's been mixed or more on the friendly side, I would say. But the impact, I think, for US could be one, if higher yields lead to a slightly stronger dollar. Again, the stronger dollar could have some impact on emerging markets. As you know, stronger dollar tends to be a bit of a negative for emerging markets. But overall, I think in terms of the world going to a multipolar world and the opposition towards China, I think the relations that Trump has had, at least what he said in the past, towards India is a bit more constructive. But really looking at the dollar and the inflation impact on the US.
Okay, Fook, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts. We'll